Hey everyone, welcome back to Corporate Decoder. This time we're diving into Genco Shipping and Trading's latest annual report, so buckle up buttercups, it's gonna be a wild ride across the open sea. Genco Shipping and Trading just dropped their annual report for 2024, and here's the gist of it. They hauled in some decent profits despite a few rough patches, and they're planning to keep the dividends flowing, trim down debt, and maybe even add a ship or two to their fleet. Genco moves dry bulk cargo like iron ore, coal, and grain across the globe, using a fleet of 42 ships. They're mixing things up with how they rent these ships out, using both short-term and long-term contracts to try and make the most money they can, and they own mostly Capesize, Ultramax, and Supermax vessels, which give them exposure to a wide range of dry bulk trade flows. Their strategy focuses on paying out dividends, reducing debt, and growing their fleet. Basically, keep the shareholders happy, clean up the balance sheet, and expand the business. They have a good cash position, they've reduced debt by a lot recently, plus they have availability on their credit line to buy more ships and pay for normal operations. So they have a good liquidity position. When it comes to how they make money, they've got two main businesses, the major bulk vessels and the minor bulk vessels. Looking ahead, Genco wants to run a top-notch fleet that meets all the safety and environmental rules, and maybe even exceed minimums and regulations that are in place. They're keeping their eyes open for chances to buy more ships that will boost their profits, and are being dynamic with how they charter out their vessels, playing the short-term market but also open to longer deals. They are very proud to be a company with high standards for safety, performance, and reliability, and feel that their management team will take them to newer heights. Genco's fleet is made up of mainly Capesize, Ultramax, and Supermax vessels. All of these vessels have reputations for being high quality. The day-to-day running of the ships, like fixing them, keeping them running, and hiring crews, is handled by GSSM and Synergy, but Genco's own team is keeping a close eye on things. They use spot market voyage charters to fix a large portion of their vessels, allowing for flexible contracts. A time charter, however, lets a charterer use a vessel for a period of time, paying a fixed daily rate while covering all voyage expenses. The expiration dates on some of these agreements are variable because they depend on when a vessel completes its final voyage under the charter. Here's a snapshot of the employment contracts for their vessels as of February 20, 2025. A mix of voyage charters, fixed-rate charters, and spot market-related deals that expire in a range of times and dates. To ensure their ships are top-notch, Genco adheres to classification society standards and has their ships regularly inspected, which gives them a competitive edge with customers. GSSM provides personnel to ensure the vessel are functioning properly. They follow the IMO's International Safety Management Code and have all the necessary safety and compliance documents for their ships and personnel. To insure a ship, the company maintains war risk, hull, and machinery insurance, as well as a protection and indemnity cover. To defend against cyber attacks, they have cyber liability insurance. They have the crew released in case of piracy in the Gulf of Aden off the coast of Somalia and the Gulf of Guinea. Genco, like all shipping companies, has to comply with a lot of environmental rules. For instance, new limits were recently put in place to lower sulfur oxide emissions from ships, which affect the type of fuel that can be used. They must also implement ship energy efficiency management plans and meet certain energy efficiency standards for new ships, which may require them to upgrade current ships or buy new ones. The IMO has set targets to reduce greenhouse gas emissions from ships, and this may cause the company to find ways to reduce carbon emissions. Various agencies such as the U.S. Coast Guard and the EPA have regulations that the company must adhere to. The IMO has also adopted the International Code for ships operating in polar water, which the company must abide to. In addition, the U.S. Oil Pollution Act imposes big liabilities for oil spills, but Genco maintains insurance to cover these risks. If anything catastrophic occurs that goes above what their insurance covers, it could affect their dividend payments. The European Union is also pushing for greener shipping and is looking to include shipping emissions in their carbon market, which will likely impose additional costs. Greenhouse gas regulation, fuel efficiency improvements, and other environmental and sustainability issues are something that could make this business more difficult. Another challenge for Genco is the increasing threat of piracy in certain regions, which requires additional security measures and expenses. In addition to the challenges of operating in the shipping industry, if a vessel is damaged, it may result in a loss of earnings. They also rely on a handful of big customers for a large part of their income. If they lose any of these key customers, it could hurt their financial performance. Interest rates and the debt that Genco has outstanding to keep their business running is very crucial. And because the company is incorporated in the Marshall Islands, investors might not have the same legal protections that they would with a US company. Cybersecurity is an ongoing concern, as any breaches in their IT systems could disrupt operations. Since the business is dependent on the supply and demand for cargo, seasonality can impact operating results. Despite these challenges, Genco managed to remain afloat. Voyage revenues were up because of strong shipping rates, although fuel expenses were also a factor. Depreciation increased mainly from dry dock amortization costs, but also because one of their vessels was divested. SD Shipping and Transport T. Limited and Oldendorf Carriers were their key charterers. They do note that they have all their money split between 7 banks. The board determines dividend payouts. These new emissions requirements may impact the cost of operations. Genco has a decent amount of earnings coverage under their various expirations and charters. Their operating expenses are higher due to older vessels. Overall, this sector is affected by many outside forces such as government regulations and the condition of ships. They have been both buying and selling some ships recently. The company has their chief financial officer, internal audit director, and external technology department assess material risks from cyber attacks. Overall, the company recognizes that any additional climate control legislation could cause the company to make significant financial expenditures. So where does this leave Genco? Well, the company is pursuing growth opportunities while distributing dividends. This industry is subject to unforeseen issues such as political situations. The aggregate market value of the registrants voting common equity held by non-affiliates of the registrant on the last business day of the registrant's most recently completed second fiscal quarter, computed by reference to the last sale price of such stock of $21.31 per share as of June 30, 2024 was approximately $896.9 million. With the company's financial performance, the dividends and share repurchases can vary. Currently, Genco Shipping and Trading is classified as a large accelerated fund. They are not a well-known seasoned issuer. Now, what's my take on Genco Shipping and Trading? They seem to be steering the ship in the right direction, reducing debt and rewarding shareholders. However, they have various risk factors out of their control. A couple of new ships have given the company the opportunity to grow while their high dividend rate is very attractive, which could get a lot more investors interested. The fluctuations in shipping rates and fuel costs can really hurt their profits, and they need to keep up with environmental regulations, or they will start to see an increase in expenditures. From a valuation point of view, Genco looks fairly valued, but the stock still carries risk. Given these factors, a reasonable price range for Genco in the near term looks to be between $18 and $24 a share. Overall, I'm leaning towards a slightly bullish outlook, but we'll be keeping an eye on geopolitical issues with shipping. Thanks for tuning in to Corporate Decoder. Don't forget to hit that subscribe button so you won't miss out on upcoming analysis.